Watch video 45 on Chapter 10, Risk, Return, and Performance of Funds from the Workbook for NISM Series 5A, Mutual Fund Distributors Certification Examination, and review the multiple choice questions and answers. 1. What are the two broad categories of risks highlighted in the Scheme Information Document, SID? A. Systematic and unsystematic risks. B. Standard and specific risk factors. C. Market and credit risks. D. Operational and financial risks. Answer: B. Standard and specific risk factors. 2. Which risk is not a standard risk factor for mutual funds? A. Default risk. B. Liquidity risk. C. Political risk. D. Interest rate risk. Answer: C. Political risk. 3. What does liquidity risk refer to in the context of mutual funds? A. The risk of losing principal. B. The difficulty in buying or selling securities. C. The risk of fluctuations in interest rates. D. The risk of changes in government policies. Answer: B. The difficulty in buying or selling securities. 4. What impact does an increase in interest rates have on fixed income securities? A. Prices of existing securities rise. B. Prices of existing securities fall. C. Interest rates remain unchanged. D. It has no impact on prices. Answer: B. Prices of existing securities fall. 5. What is reinvestment risk? A. The risk of receiving lower than expected dividends. B. The risk that cash flows received cannot be reinvested at the same rate. C. The risk of losing principal due to market volatility. D. The risk of fluctuations in foreign exchange rates. Answer: B. The risk that cash flows received cannot be reinvested at the same rate. 6. Which of the following is a specific risk associated with equity and equity-related securities? A. Settlement risk. B. Default risk. C. Economic risk. D. Currency risk. Answer: A. Settlement risk. 7. What is the risk associated with mid-cap and small-cap companies? A. Lower volatility compared to large-cap companies. B. Higher potential for loss of investment capital. C. Guaranteed returns due to their smaller size. D. Greater liquidity than large-cap stocks. Answer: B. Higher potential for loss of investment capital. 8. What can affect the liquidity of investments in mutual funds? A. Market sentiment. B. Trading volumes and settlement periods. C. Interest rates. D. All of the above. Answer: D. All of the above. 9. What does the term counterparty risk refer to? A. The risk of missing investment opportunities. B. The risk of a borrower defaulting in securities lending. C. The risk associated with short-selling stocks. D. The risk of fluctuating dividend payments. Answer: B. The risk of a borrower defaulting in securities lending. 10. What is a potential consequence of market volatility on a mutual fund's investments? A. Guaranteed profits. B. Increase in trading volumes. C. Temporary periods of uninvested assets. D. Decrease in interest rates. Answer: C. Temporary periods of uninvested assets. 11. Which risk is directly related to changes in the political landscape? A. Interest rate risk. B. Economic risk. C. Political risk. D. Currency risk. Answer: C. Political risk. 12. What is the main characteristic of derivative products? A. They provide guaranteed returns. B. They require different investment techniques and risk analysis. C. They are always less risky than stocks and bonds. D. They are not traded on exchanges. Answer: B. They require different investment techniques and risk analysis. 13. In mutual funds, what does market liquidity risk refer to? A. the ability to transact derivatives at favorable prices. B. Limited trading volumes of derivatives. C. The risk of losing all invested capital. D. The risk of missing dividends. Answer: B. Limited trading volumes of derivatives. 14. What type of risk is associated with short selling? A. Default risk. B. Currency risk. C. Liquidity risk. D. All of the above. Answer: D. All of the above. 15. What happens when there is a lack of liquidity in a bond market? A. Prices of bonds will always rise. B. Bonds can become illiquid, causing potential losses. C. Investors will receive higher dividends. D. Trading volumes will increase. Answer: B. Bonds can become illiquid, causing potential losses. 16. How does a company's dividend history affect mutual fund investments? A. Past dividend payments guarantee future dividends. B. It has no impact on the performance of the fund. C. Future dividends are uncertain and can vary. D. Companies will always pay higher dividends. Answer: C. Future dividends are uncertain and can vary. 17. What is the primary concern with using derivatives in mutual funds? A. They are too complicated for investors. B. They provide low returns. C. They carry a high degree of risk. D. They are not regulated. Answer: C. They carry a high degree of risk. 18. What risk arises due to a difference in price movement between a derivative and the security being hedged? A. Counterparty risk. B. Market liquidity risk. C. Basis risk. D. Model risk. Answer: C. Basis risk. 19. Which risk factor is associated with corporate governance and management decisions? A. Default risk. B. Economic risk. C. Political risk. D. Dividend risk. Answer: D. Dividend risk. 20. What is a characteristic of large-cap stocks compared to mid-cap and small-cap stocks? A. They are more volatile. B. They typically have lower market liquidity. C. They generally present lower investment risks. D. They are less likely to pay dividends. Answer: C. They generally present lower investment risks. 21. What is the main risk associated with foreign investments in mutual funds? A. Currency risk. B. Interest rate risk. C. Market liquidity risk. D. Settlement risk. Answer: A. Currency risk. 22. What does the term interest rate risk indicate for fixed income securities? A. Interest rates always lead to increased bond prices. B. Bond prices may fall when interest rates rise. C. It has no impact on fixed income investments. D. It is a minor risk compared to others. Answer: B. Bond prices may fall when interest rates rise. 23. In the context of mutual funds, what is the risk associated with economic downturns? A. Political risk. B. Economic risk. C. Currency risk. D. Interest rate risk. Answer: B. Economic risk. 24. What might indicate a problem with the liquidity of a mutual fund? A. Increased returns. B. High trading volumes. C. Delays in settlement of transactions. D. Consistent dividend payments. Answer: C. Delays in settlement of transactions. 25. Which of the following can influence the NAV of a mutual fund? A. Only individual securities performances. B. Broader market movements and economic factors. C. The political affiliation of the fund manager. D. The number of investors in the fund. Answer: B. Broader market movements and economic factors. 26. What risk is associated with the profitability of a company in the context of mutual funds? A. Settlement risk. B. Default risk. C. Dividend risk. D. Economic risk. Answer, C. Dividend risk. 27. What is the significance of the scheme information document, SID? A. It lists all potential investors. B. It outlines risk factors and mitigation strategies. C. It guarantees investment returns. D. It is required for taxation purposes. Answer, B. It outlines risk factors and mitigation strategies. 28. Which risk type is heightened when investing in smaller companies compared to larger ones? A. Interest rate risk. B. Default risk. C. Market volatility risk. D. Currency risk. Answer, C. Market volatility risk. 29. What does model risk in derivatives involve? A. The risk of inadequate funding for investments. B. The risk of incorrect pricing or valuation of derivatives. C. The risk of counterparty defaults. D. The risk of not being able to sell securities. Answer, B. The risk of incorrect pricing or valuation of derivatives. 30. Why might a mutual fund manager face execution issues with derivatives? A. Due to increased investor interest. B. Due to lack of proper training. C. Due to insufficient bids or trading suspensions. D. Due to excessive regulatory oversight. Answer, C. Due to insufficient bids or trading suspensions.